Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of the S&P 500, ticker symbol SPX. And so something happened on Friday, March 15th, that I do think is starting to suggest that the S&P 500 is beginning to show some weakness. And so I wanted to go over that. I don't think it necessarily means it's going to break, in the next few days, the next few weeks, but I do think this is the beginning of cracks starting to form in the S&P 500. And with that being said, I do think it's starting to get riskier, and I do think there could be a lot of money to be made on the downside, and I will go over that in just a minute. But first, I did want to go over the SPX. And so here we can see that it did close on Friday at a price of $5,117.09, being just about flat on the day, but I do think it closed below a pretty key level. And so what we see in the chart right here is I do have this uptrend drawn from the low hit on October 27th and the low hit on January 17th. And so from those two pivot points, we do have this uptrending line that we really haven't seen multiple closes below it until Friday. And so, you could adjust this line to maybe be based on the pivot points over here, but I do think it's good to start this with the assumption, that it's good to not have closes below this level and to wait for confirming closes below this level. And also looking at this before I do zoom in, did want to point out these gaps to the downside, as well as, this little gap here. And also this was the previous all-time high, I believe, at $4,818. So that is another level that we might be returning to on the downside. And if we do go past that, of course, these gaps lower. But then just zooming in here, I did want to point out that we have gotten a few closes or a few wicks at least below this uptrending line, but we haven't seen multiple closes below until Friday. So like on February 21st, we did get an open below the uptrend, and this was, I believe, just before Nvidia earnings, and then there was a gap up. And so we did get a fake out break and then moved back into that wedge above this uptrending level. We did bounce around it for a week or two, and then we got another break, closing outside, closing below that uptrend. But then we did reclaim it. We did test the top of the wedge again, and then we did move below and close below that uptrending level. But then, of course, as you might guess, we did reclaim it. We closed inside. But then on Thursday, March 14th, we did put in a close below that level. And on Friday, not only did we get a second close below this uptrend, we got a close lower than the low hit on the 14th. And so that was at a price of $5,123.30. So putting in a close lower than that low does suggest confirmation of this break. So I do think that we might see some moves to the downside. Might take a couple weeks, might take a couple months for that to play out, but I do think this is the beginning. And so if I do switch this over to the weekly time frame, we can see that we actually did not get a close below the previous week's low. And so that would be at a price of $5,056.82. So if we get a weekly close below $5,000, I do think that would be really bad. But as of right now, it does look like, we are just starting to see cracks. And this could potentially be the beginning of a topping signal with these wicks to the upside. And then finally, before I switch over to the other tickers, I did want to move over to the monthly time frame so we can see it does look like we might be putting in a spinning top or an inverted hammer for the month of March. The month is, of course, not over yet, but as we do see how the price goes over the next couple weeks, we might end up seeing a topping signal on the monthly time frame, and that could suggest that we will be heading down to these levels to the downside. So I did just want to throw that out there. And now I am going to switch over to the semiconductor ETF, ticker symbol SMH, which you can see here. I don't have any lines drawn on this, but there is one thing that stood out to me on Friday that I wanted to point out. It does look like we have been downtrending for, the past couple weeks, but the close on Friday was higher than Thursday's low. So that does suggest that this is not a confirming break of any level. But if we do switch over to the weekly time frame, we did get a close lower than the previous week's low. And so the previous week's low was at a price of $218.29. And as you can see, the closing price for the week ending on March 15th was lower than that. So this could very well suggest that we are starting to see a top in semiconductors. And then from this, I also wanted to compare that with the Nvidia chart, ticker symbol NVDA, because I have gone over this in other videos, and it does look like, we have seen a little bit of a downtrend in the price the past couple of weeks, but we got a close higher than Thursday's low, which was at a price of $866. And so with the close on Friday being above that, that does suggest that it is not breaking just yet and that we might see some more upside. And with the high being at a price of $974 that was hit on March 8th, I could see Nvidia going up to $1,000 a share and that potentially marking the top, as I did think that a market cap of $2 trillion could be right around the top. We have been able to hold above that the past couple weeks. And so, I do think that the next psychological level for Nvidia to break would be $1,000 per share. And I do think that is feasible. If we get a little bit of a rally, we could form a double top, and then things could really start to turn around for the stock and the semiconductor sector. And then looking at this on the weekly time frame, while we don't have a technical topping tail here for the week closing March 8th, because we did not get a close in the lower quarter of the trading for that week, pretty close, but not quite. But we do have this pretty big wick up there, and so to negate any sort of topping signal, we would need to get a weekly close above $974. So I do think that could be happening in the next week or two, and I do think that would make a lot of headlines that would get a lot of people to want to FOMO into Nvidia, because it never stops. It keeps going up. And I do think that could be a great time for a rug pull. So I would be concerned if we did get a weekly close above 1,000. I do think that could be marking a top. So I do think that is something to be paying attention to. And then also going over the monthly time frame here, we do have a pretty nice wick up here. But again, the close so far for the month is right around the halfway point. So it doesn't suggest that this is a topping signal or a topping tail, but I do think that with this wick up there, it is suggesting that the top may be near. So I do think that is something good to be keeping in mind, especially, if we do see a rally above $1,000 a share. We do have this gap to the downside right around $689 here based on the high of February 21st being at a price of $688.88. So that is a level that Nvidia might be returning to. And then the way that I think we could make some money on the downside, whether it's the S&P 500 or Nvidia or semiconductors generally, the 3x leveraged short semiconductors ETF is ticker symbol SOXS, and that has recently hit a new low of $2.76, which does look like it had bounced on the 2618 extension from this retracement here marked in yellow That was at a price of $2.86. So we did get a close below that on March 7th, getting a close at $2.84. So just 2 cents below that level. But then the following day, we did get a bullish engulfing candle going up almost 12% on the day. And so that does suggest to me that this is a significant level, $2.86. And that because we were not able to get 2 closes below it or a confirming close below it, that would suggest continuation to the downside. I do think that the bottom could be in for SOXS. But I do also think that it might be just about at resistance. Looking at the 1618 level here from this extension, that is at a price of $3.67.8. And the close for the week on Friday, March 15th, was just below that at $3.59. It also does look like we're putting in a hammer candle there, which could suggest a reversal. So I could see price pulling back to right around $3.35, right around there. And from that level, it could be a great dip buying opportunity. As the markets start to top, SOXS will be bottoming, and I do think it has a lot of potential to the upside, over 300%, if it were to return to the highs that it hit at the end of October, coinciding with the lows of the S&P 500, as well as semiconductors and Nvidia before the recent rallies to new all-time highs. So with that being said, I do think that there are a lot of levels that SOXS might be bumping into on the way up that might act as resistance. But big picture, I do think that there's a lot of upside for it. While it is 3x leveraged, meaning there is 3x the risk, I do think that as we do hit tops over the next couple weeks, maybe months, I do think that SOXS will pay in the long term, or, it may just pay if it gets back to some of these levels, like this gap to be filled right around Nvidia earnings, and that would be going to a price of $4.64. So from current price, that represents a gain of over 25%. So even just to that level sounds pretty good to me. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.